Walter Piecyk of Lightshed Partners joins us now. Walter, great to have you with us.
Thanks for having me, Melissa.
Obviously, people are not using the internet. Where are they going? I mean, is this really a story of their competitors just gaining?
Yeah, I mean, I think you had a big surge of internet usage during COVID, but then you had companies now starting to overbuilding fiber. Fiber is, frankly, just a better service, right? It's faster. You have more uplink speed in order to do things. And in addition, you had companies like T-Mobile and Verizon that had all this excess spectrum and started selling what Charter jokes as cell phone internet. They've been joking about this as cell phone internet for years, but that cell phone internet, is eating away at their subscriber base. AT&T now, this is like the next shoe to drop. John Stankey at AT&T has long said, oh, we don't really want to get into the cell phone internet game, preserve our spectrum. And now they have a little bit of a pivot, right? They got money from the big, beautiful bill, which they're going to invest more in fiber, right? So come after with more fiber builds over the next couple of years. And they're going to be more aggressive at selling mobile, paired with this, again, what Charter calls cell phone internet, which is this mobile broadband. It's things that Charter and Comcast told people for years would not have legs, and yet you have millions of subscribers, accessing the internet, through this type of service.
Right. So the multi-year agreement that Charter and Comcast announced earlier in the week, that service with T-Mobile won't launch until 26. Do they have enough time? I mean, are investors going to be patient enough to see the fruits of that agreement?
That is a very limited agreement that deals with the business segment. Certainly, that's a positive for Charter and Comcast, also a positive for T-Mobile. But that doesn't move the ship or change the overall pattern here, which is broadband. Now, look, they've done stuff on the video side that people are applauding because they're not losing as many subs as they used to by basically allowing customers to get much cheaper, skinnier bundles that also include your streaming services. But that business is still a terrible business, right? The revenue is down 10%. So that you're just swapping customers into lower priced, products with low margins. And it doesn't seem to be having the benefit to broadband as everyone thinks it is. I mean, they've talked about lower churn. This is a metric they don't report, by the way. So they're saying like there's less customers churning. We're adding more subs, but somehow their net additions are in decline. Like the math just isn't working. And I'm just not sure that just by offering someone cheaper video, that this is somehow going to stop your cable customers from leaving and going to fiber, or in some cases, again, what they call cell phone internet, which is, wireless broadband.
Hey, Walt, it's Tim. There's the two parts of what's going on in the cable and the essentially pulling the plug is that one, obviously we're starting to see some M&A in the private equity space. Obviously the Paramount deal is a interesting look into some of the parts. Can you give a read into how you think the next shoe could fall within the sector, or how you are viewing this whole dynamic of whether you want to get into the content or at least some of the conduits, who might be good matches for each other here?
Tim, that is spot on. And the end game here theoretically should be consolidation, vertical consolidation, where you're buying your connectivity services from one player. When we enter this year with Trump as president, I looked at Charter as a potential target. And then Verizon decided to buy Frontier instead. Not necessarily the same size company, but a lot of overlap there. You had Mike Sievert, the CEO of T-Mobile, on their earnings call this week, throwing more and more cold water on the fact that they're saying that they don't want to own, Charter or cable assets. And then you have like the last one, the big one that you could think of is Comcast buying Charter. But, given what the president has said about Comcast, and the ownership that they have, it doesn't seem like that would be something that would be, let's say, easy to get through the regulatory process.
Comcast is down 5%, Walt, today. It's, been pretty range-bound for a couple of years. I think that's putting it generously. I'm just curious, does it look better once it spins off Versant?
such a small, no offense, but like such a small portion of their overall business. Even the media side of the business. I mean, I think it's going to be fine in terms of the parks adding a positive data point if they can reduce some of the losses at Peacock. These are all things that Rich Greenfield, I think, covers quite well. But look, at the end of the day, Comcast, like Charter, the core business, what generates the EBITDA and the free cash flow, is that broadband business. Right. And, Comcast has been a little slower at executing on some of the things like giving out free mobile lines, things that should help churn than Charter. That's why they traded at discount primarily. So I think if Comcast can execute on giving out free phone lines, do a better job at holding on to broadband subs, maybe get some lower losses at Peacock. We'll see how the parks do. These are things that can help to at least close the gap in the valuation with Charter.